Welcome back to Bazaar Morning Call. Well, we've all seen those alarming pictures of tourists crowding hotspots like Himachal Pradesh over the last 24 to 48 hours. Of course, it is a scary situation from the COVID front, but one thing is for sure, tourism seems to be back with a vengeance. So we have a management joining us now. Lemon Tree Hotels is the stock on our radar. Patanjali Keswani, who's the chairman and managing director at Lemon Tree Hotels, joins us now to talk about the big surge that we have seen in visitors and what the potential looks like going forward. Mr. Keswani, good morning. Can you tell us what is the situation right now with respect to your own hotels in terms of occupancies, bookings? How much higher is it compared to, say, the last few months on an average?
So as you know, Sonia, in Q4, things were picking up and we were back to about a little over 50% of pre-COVID revenues on a month-by-month basis. April started, we saw the decline starting in April. And by the third week of April, it had really come down. And in fact, May, I was reading that HVS has said that it was the lowest ever occupancy in India because obviously not only were there locally, localized lockdowns all over India, there were also a great sense of fear for travel. So whether you look at airlines as a proxy, airlines I think did 15 or 16% of their normal passenger load. So May was absolutely horrific. HVS said that the all India occupancy was sub 20% with an earning per room of about 20,000. This is in the branded hotel space. So 20,000 per month for a room is one sixth of what it should be. So that was May. June, this slowdown continued, but the interesting thing is by the third week of June, there was this, very noticeable pickup. And without giving any guidance, I can say our occupancies now are north of 50%, which is much, much higher than what we thought it would be. And even the average rates have started climbing up and are north of 10%. So put together, if I just looked at the first week of July, it would be 70, revenue growth of 70% over, say, the previous month.
Okay.
So it's looking very positive, but I want to give a little caveat. The entire situation depends on the third wave. So we have no doubt there will be a third wave. But if the third wave is not too severe, then my expectation is that this trend line will continue. However, if there is a very severe third wave, and I saw the SBI report which said the third wave can be as severe, if not more than the second, then I expect that there will be some kind of a moderation from mid to end of August till perhaps September.
Okay, one minute, Mr. Keswani, if I can revise your numbers, you said you have had about 50% occupation in the first quarter, and you could push up tariffs by 10%, right?
North of 10%.
Oh, north of 10%.
It is actually about 15%.
Okay. Is there any difference in terms of business and leisure hotels? Which one did better?
So interestingly, even our business hotels, and about 80% of our inventory is business hotels, they are doing very well. I mean, relatively, of course. So I don't see that big difference. I do know that in our newly opened Aurika, which is our, you can say our deluxe hotel in Udaipur, we are doing, 80-90% occupancy. Not at a great rate. It's about 8,000-10,000 rupees. But it's doing 80% occupancy, which is an amazing number for July in Udaipur.
Okay. Mr. Keswani,
Goa, as you know, was practically shut down. So now that we have opened it, it too is showing a positive trend line.
Oh, yeah, you would have some idea in terms of advance booking. So can you tell me about weddings and events? I'm sure there'll be a lot of pent-up demand because people would not have wanted to risk during the second wave months. All that would have gotten pushed. Can you gauge how, other things being equal? I mean, assuming that the third wave is smaller than the second wave because the country would be at least partially vaccinated. With those assumptions, can you see a kind of a revenge booking for weddings and events?
I can see. Not only weddings, for events. Well, events I would say are still subdued. See, the best dates for weddings are those Shaya dates. And Q1 had plenty of them, and therefore that opportunity was lost. But to give you an example, we've had, I think, we have about 3 weddings in Udaipur. We've had a few other weddings across India. Q3 looks very good. We've got a bunch of inquiries. So my broad view, Lata, is that Q2 will be much, much, much better than Q1, barring some severe third wave. If there is a normal, muted third wave, because at the rate at which we are vaccinating, I expect the third wave should not be very severe. In which case, Q2 will be good, Q3 will be significantly better, and I expect that Q4 will be a normal pre-COVID level of revenue, which is for us about 200 crores or 250 crores in a quarter.
Got that.
Which is very significant.
Got that. So what about debt? I mean, has debt blown up in the months when you didn't make money? And
no, strangely, we were... So you see, it's like this. 2 years ago, when we had a revenue, if I remember right, of about 670 crores, we had an net EBITDA of about 250. Since that time, we have added 50% capacity. I think this is something most people do not realize, that Lemon Tree was operating only 3,400 rooms, and now owned rooms. Of course, they were managed rooms. We now have 5,200 rooms. Now, all these 1,800 new rooms accounted for an investment of about 1,800 crores. And our total debt is actually right now on a net basis about 1,500 crores. So, the earning capacity of this 1,800 crores of capex, which got operationalized really in the 12 months or 14, 15 months pre-COVID, that did not have the chance to generate additional EBITDA. So effectively, the first 250 crores of EBITDA was on the first 3,400 rooms. The additional hotels would only add incremental EBITDA, obviously. So I am not in the least concerned about debt. We are very comfortable. We had a cash loss of only 20 crores in the last financial year. That includes 30 crores of deferred tax, so say 50 crores. And if in a COVID year we are negative by 50 crores, then when our revenues are 30% of what they should be, then, there is no issue on our debt, actually.
Point taken, Mr. Keswani. All the very best, and let's hope there isn't anything much in terms of a third wave, and you have a great FY22.
Thank you. Take care. Bye-bye.
Bye. All right. Meanwhile, Anuj, markets have lost the morning elan.
They have, and that's because of Reliance. It's become a bit of a weak counter, down 1% now and putting quite a bit of pressure on the market. The Bank Nifty is still in the green, not by much, of course, but Reliance is the one which is putting quite a bit of pressure on the market, along with some IT names, which have also become a bit weak over the last couple of days. Mitesh Thakkar and Prakash Kaba joining us. Morning again, Mitesh. Your thoughts on first hour and what would be your trades now?
Anuj, I think, the Bank Nifty's, effort on the upside is kind of getting countered by Reliance. But I think broadly the market also, with yesterday's another attempt at 5,900, failing, the indicator status has cooled off. So I don't expect an up move soon. But I think we're trading with, mildly long buys. But yeah, we have also taken some short positions on index, on a stock. So have one buy and one sell right now. UPL is a buy with a stop at 808 for targets of 840, and Cadila is a sell with a stop at 640 for targets of 620.
Okay, by the way, the stock of the moment right now is RBL Bank. That's now surging almost 3% higher after starting quiet. So that one is reacting favorably to its business update. Prakash, good morning. What are your trades?
Yeah, good morning, Anuj. Yesterday's Nifty and Bank Nifty is a very, very strong resistance to deal with. So as long as there's, I think it's a resistance, a lot of headwinds out there. I have two stocks here. One is HDFC. That looks good. Very good chance we can see HDFC climb to around 2,600 zones, stop below 2,500. And the second stock that I like is RBL Bank. Yes, it's looking certainly good. I like the setup here. Good base formation, good breakout, and looks like it's heading up to levels closer to 225 zones, maybe in a day or two, maybe today, tomorrow. Stop below 214 on RBL Bank should be fine.
Gentlemen, thanks a lot for those updates. So it looks like we are in for a bit of a volatile day, Lata.
Oh yes, choppy, but not a very big swing day.
Yeah.
Let's see. The first hour has been indecisive. Let's see how the rest of the day is. For the moment, we're going to take a break and then prepare you for the big fat earnings season ahead. We have about the best analyst we can get, Gautam Duggad, the head of research of institutional equities at Motilal Oswal, joining in to tell us what he is expecting from this results season.